You just heard from our Jim Cramer. His point was certainly made on Monday when a lot of investors seem to be caught off sides when it came to the tariff announcements. Do you believe that the president right now, what he says, his actions, the things that he says and doesn't says, the call that he didn't have with Xi, is that the biggest factor in the market today in your mind?
I think it's no doubt driving some short-term market moves. I mean, it's the volatility we're seeing coming around the tariff commentary. Tariffs haven't been unexpected, but the reactions to it, where it's going, market trying to digest, is this a short-term negotiating tactic? Is this going to have some kind of longer-term play that's going to be more sustainable? It's absolutely driving the markets, but we expect to see that play out, over the shorter term. And we'll see, kind of how this plays out as far as what settles in and ends up being there from a tariff perspective in the longer term.
During some of these trade tensions, the tariff war, however you want to describe it, we've seen a lot of volatility in the market. In previous months or last 2 years or so, we've seen a lot of investors go to tech for safety when we've seen volatility. With some of the things that we're seeing right now, Alphabet potentially being probed, Google potentially being probed, does that change that thesis that this trade war might actually hit those tech companies as well? And I'd also like to very quickly get your take on the Alphabet earnings.
Yeah, I mean, if this turns into a full-blown trade war and with a focus on tech, that'll be a concern. Tech has been a safe haven play. These are big companies with fortress balance sheets that that have been driving the market performance. We've seen mixed results from earnings. Overall, it's been pretty strong. The CapEx spend is a little bit, causing some concern following the DeepSeek announcement. But we've seen big tech committed to making these big CapEx spends. We saw it with Microsoft and Meta as well, that they're committed to continuing to drive their AI development forward, even in the wake of the DeepSeek announcements.
So you mentioned the consumer in your notes to us, that your consumer continues to be strong. Are you concerned that that dynamic may actually change? And does that change your view of what sectors are a great investment, what sectors you might want to stay away from? The idea that tariffs and inflation could actually hit the consumer, hit GDP, and create somewhat of an economic slowdown?
Yeah, the consumer is no doubt a big focus and really the most important factor in what we're going to see from economic growth going forward. And it's been incredibly strong. We saw, 4.2% spending in the fourth quarter and expect that to remain strong. But if we see tariffs, if we see, prices going up, more inflation, we're already seeing, some kind of credit card balances going up, some savings going down a little bit. Right now, consumer remains strong, so we're still cautiously optimistic that that's going to remain in place. But it will depend how much. If we see inflation tick back up, that will be a concern and could lead to some more softness in that area.